One, two, three. I'm just finding my voice, but wow, ladies and gentlemen. Can you believe this podcast, this episode, has got a title? It's called From Beast to Burden. And, ladies and gentlemen, here we are again. Me! I'm Hugh Hendry, the acid capitalist, and I'm talking to you from the edge, from my ledge, perhaps, in St. Bart's. Yeah, I'm broadcasting from the Caribbean, just before setting off on my global summer adventure that'll take me over to Los Angeles, Japan, London, and then back over the Atlantic to the wonderful Joshua Tree. Boy, do I love the desert. But before I go on this gallivanting, I'm determined to crack this. It's been resting inside me too long. I gotta release it. So here I am. I'm at my desk. I'm on the first floor of Maison Blanc Bleu. A coffee in one hand, a microphone in the other. My mind drifting out to sea. Can I do the sequel, the follow-up to the Spice Ledger? Let's have a go. I mentioned the sea. Why? Because the sea, in its majesty, the sea is brutal, but it's honest. And I respect that. It's not sickle. I sound as if I've got a stutter. It's not, what is that damn word? Sycophantic. Sycophantic, my friend. The sea is not sycophantic, which is to say it doesn't lie. It gives, it takes, but it's always willing to tell you what's coming straight at you. You just got to listen. You got to be curious, kind of open-minded, so to speak. And somewhere out there, along the blue azure, I got to tell you, something is hiding behind or beyond the horizon. But I want to say I can reimagine the dollar, the spiritual beast of global finance, the karma master of macro. This mighty beast that for decades it's danced across the globe. A benevolent pirate. I'm thinking Johnny Depp, you know, Captain Jack Sparrow. Escapades for the dollar. Aye, there have been many. The Jolly Roger, the global reserve currency, an emperor's currency. It brought with it what some call the sweet, seductive, the privilege of empire, of borrowing cheap and spending wide. I love doing that. Letting others treat American IOUs as though they were sacred treasure. Johnny Foreigner, he's called this an exorbitant privilege. But you know, I don't know. I don't get it. Let me ask you this. What if this treasure chest, what if it was a burden? A beast of burden all along? A chimera? Is it a chimera or chimera? Chimera, I think. Not a story of dominance, but rather a story of service and obligation. The United States, by design, or is that destiny? But the buyer of last resort, the borrower of final appeal, the insurer of the whole damn world, forced to consume what others suppressed, forced to issue what others hoarded, to sell off its future, these damn IOUs, to run the twin deficits, both on trade and fiscally, to run deficits that few dare to run. And yet now, for the first time in an age, I'm hearing a new song blading across the airwaves. Because you see, the current US administration, you know, the orange guy, Trump, He ain't extolling privilege no more. He's saying, we've done this for you. Like Atlas, we've carried the weight of the world on our shoulders. Us, not you whingebugs. And you know what? I'm beginning to think we've been suckers. And for what? Because you lot, you cling to your surpluses. Refuse to reform your markets. Refuse to risk. You're like bloodsuckers. You're feeding off the teat of American supreme liquidity. I want to say you lot have become entitled, as though our Yankee dollars were your birthright. Well, you know, you guys are in for a rude awakening. So let's be clear. This, and here this is hypothetical. This is a conversation. This is think of Uncle Sam in his modern version. Let's not think of Trump. Let's think of the US technocrat. Let's be clear. This economic situation of the last 40, 50, 60 years, never a fair game for America. But now, the table's flipping. I see a reckoning that's beginning. Because a new industrial age, it's upon us. The era of the AI robot is mythical. I can't find the damn thing. You look for robotic stocks. It's hard. The only one seems to be Tesla, and I'm not ready to buy Elon yet. But the AI robot, its era at least, silent factories pulsing with digital code, not chatter. Machines that don't sleep, where comparative advantage, you know, that bloke Ricardo that we talked about, 17th, 18th century. Comparative advantage no longer wears the mask of cheap labor. Wage arbitrage has gone the way of the dinosaur. No, this future is about energy, data, speed, and sovereignty. Because production is going to flow to power. And the new administration is determined that that power will be American. And this game, it's already started. But you should know this. Once those factories, these mythical future factories, not so future, once they're poured in steel and set in silicon, once that capital forms and fixes itself into habit, my friends, it's not going to just bend the future. It's going to cement it. It's going to be a deal done. And so I say to you, look, we cannot afford to arrive late to a race it's already underway. And so you see, that's kind of why tariffs are here. That's why reshoring is damn urgent. That's why the system has to be rebalanced. Not tomorrow, not post the circus of the midterm US elections, but now, baby, now. Because the next wave of industrial cathedrals is being built in our silence, but funded with US Treasury bills. Now let that sink in. American money funding the cathedrals of mischievous, foreign, sometimes fascist sovereigns. Dollars printed without the sovereignty of the United States, without the permission of Washington. Feels like a takedown. And worse, if these silicon cathedrals rise, and they rise in places where democracy is, well, let's just call it a costume at the party, hint, hint, our Chinese friends, then the fight's not going to be over trade, but over time itself. About who controls time, who scripts the rules, and who inherits the silence that we choose to govern our affairs today. So, my friends, I beseech you, let's step back and ask some really big questions. Because what if the dollar isn't just a currency, but it's a public good? Public good? Like, okay, stop the music. What? A kind of financial rainforest. It's kind of non-excludable. A club where all are welcome. But it's maintained by just one member. It's like a commons. Think Wimbledon, Hampstead Heath, the Clapham Common perhaps. Hat tip and shout all my love to my London listeners. Or Central Park in New York. Maybe. Oh my God, that's got me thinking. What was the name of the cafe in Friends? What was it now? Central Park. Oh my God. I loved Friends. Obviously, we're going way back. But I remember I came, if I told you this, I'm not sure, but I came really close to nabbing a very sexy job a long time ago that was set to catapult me from the austere joys of Edinburgh to the funky chicken living of the West Village, bibbing coffee at the Central Park. Yes, I was going to live in New York City. Yeah, a million years ago, but I was going to run a fund in collaboration with a guy called William Vaughan Muffling, a dream team at Lazard Frere, no less. William, a guy so legendary, he spends a small country's fortune making sure you've never heard of him. Of course, it never happened. The dream move. And you know what? I really couldn't bring myself to watch another Friends episode. I was heartbroken. I couldn't tell you what happened at the end. Anyway, where did I get to? Today. I talked to you of a monetary park. One where you walk in, you settle your debts, you store your wealth, and you stroll away a happy and fortuitous person. It's just that someone has to mow the bloody grass, clean the place, empty the trash, keep the peace when the trading gets rowdy. And that someone, yeah, you guessed it, has always been the United States. The mild-mannered janitor, like Hong Kong Phooey. Forgive me the nostalgia, but yeah, you ever watch that cartoon? Check it out on YouTube if you're tripping. It's kind of fun. But there's a paradox, and it's vicious. American deficits, I want to say they become the lubricant of finance, a necessity for world trade. And yet they're framed as reckless, as if issuing the world's most trusted IOUs was some careless vice. To me, this is the great misreading of our financial time. You see, surpluses, they're not always about strength. More likely, more recently, they're all about state-guided policy, suppression, and a lady called Denial? Or maybe Delilah. I don't know. My notes are all confused. Anyway, let's look at China. Rich. China's rich, but not quite rich. Wages are engineered to be just so high enough. Consumption is just low enough. It's a surplus nation that hoards rather than shares. Or Germany, perhaps, closer to home. An export juggernaut hiding behind thrift while its public sector withers. These surplus countries, they don't just demand dollar trade settlement. No, they want treasuries. They want liquid, clean, pristine, always available, always trading, always liquid treasuries. Why? To store their trade surpluses and fund their next economic leap forward. Again, think, hint, hint, silicon factories of tomorrow. So let's call them out, because they're building or seeking to build tomorrow's factories with US finance, turning American trust into authoritarian blueprints. I mean, maybe not the Germans, but certainly, I mean, if we're talking about the Germans, it would be state-sponsored European Stasis. And if that doesn't rattle your hammock, ladies and gentlemen, I really don't know what will. Because this is imbalance by design. Inequality baked into the architecture of the system, the very system itself. A vicious and a malign Gini coefficient. System on steroids set to destroy everyone. And so, as I sip here from the coconut of personal contemplation on this glorious island, which is full of paradox, the place that I call home, let me offer you a thought. The dollar's dominance is not a relic. It's a deal. The real deal. It's meant to be a bargain with a strong man. But the strong man, and I'm thinking Samson. Yeah, that's why I said Delilah. Samson, that sucker, he's bound himself to serve Delilah, as delicious as she is. But really, Samson should have led. He shouldn't have been the lap poodle doodle of Delilah. This, my friends, this is the burden of privilege. A proper beast becoming a proper burden. Oh, wow. Okay, so you cats, are you market cats down for chapter 2? From beast to burden. The strong man's slumber. Because you see, the United States, it was never overrun. It was never invaded, nor defeated, not in the conventional sense of the word. But it was bound, like the Lilliputians. I don't know what I'm talking about. It was bound by the small people, by the very system that it built. A strong man, self-shackled. It opened its gates to global finance. It offered its credit as sanctuary. And in return, it wasn't asked to lead. It was asked to underwrite. The world, they didn't storm the gates. They arrived politely, carrying trade surpluses and sterilized and gigantic savings, undervalued currencies, offshore ambition. I say to you, the strong man, he didn't fall. Rather, he was used and abused. He stocked his shelves with treasuries. He built the deepest capital markets ever known. Welcomed the world. And yet, he was emptied, not by conquest, but by design. Because only the US could meet the global demand for safe, risk-free, default-free assets. Only America could mass produce pristine debt. Now, this was a slow, deliberate plunder. It was wrapped in the fog of integration and supposed do-gooding. Global prosperity, they called it. Fake prosperity, I call it. Safe haven demand, that's what they called it, amplified by surplus nations. Economies that suppress their wages, that hoard their savings. not to grow. There's nothing noble about this. This was to sterilize. These countries, they don't reinvest. I mean, they reinvest in the glut of over capacity, but they don't reinvest in humanity. They recycle. And that recycling, it demands a counterpoint for every surplus and American deficit. A global American laundromat spinning 24/7. You see, US deficits, they don't just keep the lights on, they keep surplus countries thriving. And they swell offshore liquidity. These waves of money, or credit, I should say, out of reach, beyond the wit, the regulation, and the sovereignty of the Federal Reserve. A monetary swell that flows night and day, relentless, unregulated, infinite leverage. And what does that create? Well, that's easy. Bubbles, volatility. It's a machine of wickedness. Money without memory. Maybe money without intelligence. I don't know. Risk without agency. The dumbing down of money. But it made the great forgetting possible. The opioid of rising asset prices. It burst an illusion that this money comes without cost, without consequence. And yet, I dare you, ask the disenfranchised, the asset light, and you'll learn the price was all too real. Again, we're talking a burden, a beast of burden. But now the political walls are thinning, stretching perhaps to breaking point. Foundations cracking, anger in the dumb financial press. More importantly, not a day goes by that the 30-year US Treasury yield doesn't send another fear tremor through the system. And yet the guests, the countries that the strongman that he once sheltered, that were the recipients of his generosity, you know, the Marshall Plan for a destroyed Europe, the rebuild of Japan, the emergence of China, the acceptance of world trade entry. All these countries demand more and more. Of course they do. Is it a right? I don't know. But they demand it, not because America is weak, but because America has been so very willing to take the knee. That's the tragedy of reserve status. The country that feeds the world is asked to starve itself. And still, they dare to taunt the US, to whisper, we're not talking cats here, to whisper darkly, America is the crisis. America is the fault line. They demand that the strong man raise interest rates into economic weakness, not for itself, but for them. Absurd, yes, but real all the same. A measure of how far the status of the US has fallen. This rot, it runs deep. And this farce, I want to say this farce, is past parody. But let me remind you, this is deep state. No voter ever asked for this. No American voter asked to backstop foreign surpluses, foreign trade surpluses. No American voted to absorb the closed Chinese capital account. Now, these choices, they live in the administrative plumbing of Washington and and the capital cities of the world, in the grass, in the cold, in the shadows of murky sovereign deals. And on the outside, us, again, what do we see? We see bubbles and booms, the fiscal sprees that follow every bust. This isn't Ricardo. This isn't comparative advantage. This is trade as domination, surplus as strategy. And you know what? Strength without consent, I call that servitude. And the American strongman, evidently today, the strongman, he's done. He's done with being polite. America will no longer carry this burden alone, is the headline. This beast of burden, it must be shared. So no more free liquidity. No more free consumption. The price is rising. A price, no longer a public good. Access to the park must be earned, not demanded as a right. The utility of the greenback, of the dollar, it must be paid for. No more sacrifice from Uncle Sam. You see Samson and his hair, those delicious brown locks of hair, they're returning, growing longer. And the economic pillars, they're starting to shake, asunder. Shaking Stevens, shaking all around. Shall we do part 3? Oh heavens, part 3. I call this the end of the exorbitant privilege. Or perhaps the dislocation of modern money. Or perhaps that's part 4 or 5 or 6. Oh my God, so much to say. If America has been the consumer of last resort, I think that's what they say, then China has been its shadow banker, the silent financial partner, the vendor financier. In my world, the world of asset capitalism, China's been your crack supplier, lifting your 401k ever higher. But this marriage, it was never equal. And what's more, and jumping around a little bit, but Trump's tariffs, these aren't the first rupture in this relationship. Not the first time that America's pushed back. I want you to go back to the turn of the millennium, to the year 2000, because America found fiscal restraint. Oh my God. I'm not making this up. And yeah, it was only for a minute, a comparative minute. But budget surpluses. America was running fiscal budget surpluses. Really a function of the 4 years of 20% S&P 500 gains. Markets roaring, tax receipts rolling in to boost the coffers. Budget surpluses. That's because sovereign trade creditor appetites didn't slow down. Export economies still boomed, more so. They still clamoured for those treasuries to store their wealth and to stop their currencies from rising. The problem was that the US government was no longer in need of issuing new treasuries. That scale of expansion had moderated. And yet China and the others, they still needed to sterilize their mercantilist FX intentions to create the illusion. They needed more treasuries to buy. So you know what happened? Wall Street stepped in. No budget deficit, not enough supply of new treasury bills, a huge demand from sovereign mercantilist nations. No problem, sunshine. Like I said earlier, I'm your supplier and I'm gonna take you higher. Wall Street, those geniuses, they bundled mortgages together from all across the states of America. They spun risk into pure gold. They structured securities in safety, Fannie, Freddie, agency bonds, a synthetic heaven. And you know what? The mercantilist nations, those with the trade surpluses, they bought them all. They were Harrier? Who is Harry? They were happier than the condemned man the night before he learns the rope was never tied. Thinking about that, I'm not sure I get that, but I said it. It's on the tape. I ain't going back. But of course, then came the collapse, the calamity of 2008. Yeehaw. Subprime broke the spell, tightened the noose. The government-sponsored enterprises teetered on the brink. And China, what did China do? China called Washington not to talk, but to panic. Panic on the streets of Shanghai. Were they duped? They asked. The claim was that they'd been betrayed. They cried little crocodile tears over the telephone line from Beijing. Chinese tears. Tears for fears. The question was, would the US really vaporize its own paper? Would Uncle Sam default on them? They were incredulous. And into this drama entered Hank Paulson, Wall Street stooge, former head of Goldman Sachs, turned Treasury king. A man, a giant, fluent in both languages, markets and Mandarin. His memoir, On the Brink, it records the Chinese fury. Beijing was clear. You break it, motherfuckers, you own it. And so, America, the strong man, accommodated the Chinese. It nationalized the domestic damage. Not to save the homeowner, but to save the illusion, to preserve the privilege, to keep the noisy neighbors happy. An effort that was costly, desperate, but necessary? Necessary? I don't know. Let's pause for a second here. I feel like I needed it. I don't smoke, but this would be the moment after great sex to have a cigarette. Let's pause. Yeah, because this takes us to the pivot point, to 2010. And you see, I want to talk about quantitative easing in its second iteration, because it wasn't rescue. I call it retribution. Now, wait a minute. What just happened there? Because I think I pivoted. And yeah, I mentioned quantitative easing, but we've got to mention it. Like, okay, we've got to start with one, then two. QE1, March 2009. I'm on a train in China, would you believe, when I should have been buying NASDAQ futures. Because QE1 steadied the financial system. But QE2, that son of a bitch lit the match on something entirely different. Something which wasn't fully recognized at the time. And I would say not fully recognized now. Because Agent Bernanke, esteemed chairman of the Federal Reserve, he bought treasuries. But not, when I say treasuries, he bought bills, he bought notes, and he bought bonds, or bonds and notes. But he bought them not to soothe the market jitters of devastated shareholders, of speculators that had been repriced to zero. He bought treasury notes and bonds to scorch Chinese earth. I'm being provocative with you. He drove treasury bond yields lower and lower. I'm going to be poetic and say he burnt the rentiers' privilege. He forced the chase, the pursuit of US Treasury capital, he forced it out into the open and he upped the ante. This was sovereign shock therapy. A message to anyone that dared to listen. You guys, the funny games are over. No more sovereign bunkers. No more financial sanctuary. No more heads I win, tails I win. Bernanke's message to the mercantilist nations was stark. Chase risk or be left behind. And I want to say to you, I firmly believe, I'm not a huge fan of Bernanke, but I firmly believe this had to be done because something was fundamentally wrong in 2010. You see, the 2000s were a surreal landscape. Rates near 0%. Deficits. You know, I was telling you that we got to surpluses at the start of the decade. Well, at the end, the damn deficits were back close to 10% of GDP. And still, yet, for all this financial, federal, sovereign government accommodation, American unemployment refused to fall. There was great talk of a second Great Depression. America was learning that its stimulus was being siphoned off, its escape hatches redirected to fuel distant booms in the great coastal metropolises of China. These creditors were becoming greedy rentiers, not economic partners. They absorbed the central bank's gains and stimuli. They saw their exports boom with the American stimulus, and yet they complained at the initial loss. Fannie cracked, Freddie fell, and China whined like shareholders without dividends, Gucci pigs singing along to Radiohead. I don't know where that came from. They were no longer quiet recyclers of trade surpluses. They were bitter, entitled, and I want to say mouthy. So yeah, something had to change. Now, two mysteries haunted the decade, the first decade of this century. One, why did equities perform so poorly, even during an age of immense innovation? And two, why did debt to GDP soar, even as borrowers tried to pay it down? And the answer? In one word, the answer, China. In three words, China, China, China. Commodities surged. The emergence of China saw commodity prices surge. And with them, an illusion was born. Inflation fears, false signals, false flags, confusing bureaucrats at central banks and their rate decisions. Policymakers stared into the fire of tomorrow. It was Plato's cave, and they were mesmerized by the drawings, distorting their economic reality. They forgot that outside it was cold. They were only seeing imaginary inflation, blind to the real forces of this trade dynamic, this disinflation moving quietly through the invisible arteries of the global economy. For 30 years, I want to say to you, central banks, they fought a ghost in the machine, and they raised or they didn't cut their rates fast enough. That's what I want to say. They didn't cut their rates fast enough. The anchor drifted. The productive laboured. They were crushed under a weight that never should have been. The debtor community. I call them the crazies. The people who shape the economic future. They were asked to transfer too much of their wealth to the money changers and their bosses, the creditors, the sloths with the money, but no idea of how to deploy it productively. Excessive real returns to the rich, I want to say to you, it broke the system. The people building the better tomorrow, they couldn't capture enough of their economic share. And so productivity gains vanished and the debt piled up. The bondholders, they got richer and richer. And so the system tilted. It took the gains from the risk takers and it handed them to the lenders. Wealth exchanged from the fortune of the builders of our tomorrow, to the bankers and the financial repositories. America's great balance sheet. It wasn't monetized by its own people. No. It was rented out to foreign governments, collecting interest risk-free. The real rate, it got distorted. It got filtered through global exports. It got pushed through Chinese overcapacity. It turned into a withering toll on the entrepreneur, a tax on vision, a charge on damn courage. The garage visionary, boy, did he pay for it. So did the home builder and the engineer. Again, the guys creating tomorrow's demand. Meanwhile, the money continued piling up in agencies with no ambition, cash rich, idea poor, rewarded not for brilliance, but for sitting still. Treasury yields, a rigged game. Sovereign nations pegging, painting the tape of their currency, confiscating the savings of their productive local citizens. And this high real return from US treasuries, it rewarded the Manchurians and their trade washing gamble. The Fed meant to help Main Street, but its dollars leaked out, not to factories in Ohio, but to ghost cities along the Pearl River Delta. You see, prior to QE2, American-sponsored liquidity, Fed money, sovereign printed dollar left America to fund the surpluses of other nations. And that's why I say to you, QE2, we got to revisit QE2. It wasn't reckless. It wasn't panic. It was intent. QE2 was a message wrapped in a bottle, washed up on a distant shore beside a beached statue of liberty. QE said, rebalance the deal. I call it sovereign repudiation, cold and deliberate. A quiet but a delicious revolt against the order of the day. Now, this is crazy talk. You won't read about this. Most investors, they still don't get it. They haven't figured that the goal of QE2 was to kill the inflation premium, to reset the rates lower. By pushing the 10-year rates towards zero like this, the Fed changed the global rules. It repriced the risk. It started weighing the odds more favorably to the little guy. It gave debtors a chance, the upper hand, not to escape, but to breathe and to build again. And you know what? Up until the pandemic, whatever that COVID thing was, you could say that policy, it worked. Because since 2010, real gross domestic product, GDP, in the United States has outpaced the real interest cost. Debtors finally earning more than they owed, making enough dough to pay down what they borrowed. And one thing's for certain, stocks are certainly not underperforming treasuries anymore. Not even close. But when the Fed crushed real rates, it did more than support recovery domestically. It drained the sovereign yield swamp. The same swamp that foreign central banks had gorged on for years. It wasn't charity, it was a stark message. The era of America underwriting global surplus nations, that era was coming to an end. No more elevated credit premiums, no more free rides. This was retaliation, a sovereign counterattack, a pushback against the rentiers, against the mercantilist freeloaders, against the whole damn system. The Fed would buy what the Chinese once bought, but they would buy it faster, harder, at prices that no mercantilist would dare match. It would flood the global system with dollars, but on America's terms. And the consequences? Exactly as predicted. Chinese money creation, it went into hyperdrive. The renminbi couldn't rise, remember. It was being sterilized by the bureaucrats in Beijing. So QE did the lifting. It couldn't lift the wages, but it did the lifting through property prices. Leverage, greed, despair. I'm talking about inflation leaking out into asset prices in the hidden kingdom of China, slipping through the seams of conniving mercantilist sovereigns. I'm saying to you that if you couldn't change the nominal exchange rate between the renminbi and the US dollar, you could change the real rate by influencing domestic Chinese asset prices. Voila, that was QE2. And the Chinese private sector joined in. Of course it did. Money was plentiful. Dollars cost nothing. The foreign exchange risk, it was underwritten by Beijing. It was a fixed exchange rate system. And so the Chinese residents, they over-invoiced, invented so many ways to bring these borrowed dollars home and earn plenty. This was the greatest carry trade ever. I remember it so vividly. Remember, domestic US rates are zero. You're borrowing dollars and you're putting into renminbi, and the Chinese government is not going to allow the renminbi to rise or fall. Chinese government is controlling the vol. The vol should be 6. The vol was like 1. I'm paying, like, what am I paying? Fed's at 0. I've got a risk premium of 3. If I get that money onshore and without leverage, 20% returns. We're talking 2010, 11, 12. Think if I could leverage it. So, of course, a property bubble exploded. At one point, property prices were 4 times Chinese GDP. They were twice the size of the US economy. Think of Blade Runner. Think of Chinese metropolises flaring incandescently into the night sky. I think there's calls for some Bible bashing. Mark, is it chapter 3? Is it section 27? I don't know. 3.27. No one enters the strong man's house without first tying him up. Dollar liquidity was going to be used back at them. You see, QE2 tie them in knots, and it may yet change the fate of all of all of our tomorrows.
But you know what? I'm going to leave it there. I mean, I've been talking for about 45 minutes. This is heavy. You need a rest. I'm going to cut it. I'm going to dice it. I'm going to splice it. And I'm going to send out part 2. Give me a week. Let me get to Los Angeles. Hope you enjoyed it. Hope you're listening. You know, I wrote this little ditty in the background. Is it Ginsberg's Air? It's the acid capitalist anthem. Listen to the words, see if you dig it. It's a little bit sober. It's a little bit laced with melancholy, just like the dollar. Ladies and gentlemen, as always, it has been my pleasure to spend some time in your company. Over and out, Hugh Hendry, the acid capitalist.